Hello everyone. After you started trading with the indicators since last Monday, 1 week has elapsed. So just let us see what has happened over the last 1 week. And if we followed the rules, what trades we could have taken, which trades were loss, and which trades were at profit. Now, before we start, I have done some very small changes on the indicators. Some of you must have noticed, some of you might not have noticed. Number one, on the chart itself, if you see these background colors, they have become much more pronounced in terms of red and green. This was kind of a dull color, and quite a few of you did report that it is very difficult to see those colors on a normal screen. They are almost invisible. Now, the way this red and green is coming is it's another layer of bullish and bearish outside your Volquant or outside your option chain analyzer. It is connected somewhere to the AVWAP and stuff. So the logic is if the background is red, you are going to look for short trades only. You are not going to take a long trade. If the background is green, you are going to look for long trades only, not look for short trades. And obviously for the long and the short trades, these conditions which we studied earlier still remain in force. Fair enough? Okay. Second question is quite a few of you said that if it's something like this, okay, let's bring on a red, then you will understand. Okay. What you say is on the right hand side, this particular notes, it is becoming invisible because of the background color and stuff. This is one problem. What you can do is simply pull the chart to your left like this. This remains flat. Second one was this is taking too much space. I cannot see the notes. So what I will suggest is, mm, yeah, you go to the settings. Regime info you need to see last flip time regime icon. It's probably not that much necessary, and volatility score you can also switch off, so it becomes like this. And if you want this setup to be permanent, what you can do is just click this as default. So now this things comes here. What you need to say is what is the regime, what is the persistence, what is the bias, what is the gradient, and obviously the notes. This resolves your problem of seeing this particular box clearly. Now let us come down to what has happened since last Monday. Last Monday was 26th. Okay, the OCA which I'm using in the bottom is basically the OCA of 6th June, 5th June expiry, because TradingView has this habit that once the expiry is over, that particular option chain data is kicked out. So if you try to see the 29th May expiry, you will not find that data on TradingView. For example, if I do this, month is 5 and this is 29, which was the monthly expiry, you won't see any graph out here because the data is non-existent. So what we do is we go to 6, we go to 5, which is the current weekly expiry, and this works in substitute of this. Okay, let us go to 26 first. This is your 26th, and as I said, you need to wait till 9:30, which is till the 925 bar. This is the 925 bar. The closing is at 25080. Okay, let us just change this to 25,000. Yeah. So at the 9:30 bar, this one, I see that my bias is bullish. I see that the option chain indicator is bullish. So I will buy out here. It is around 25,080. Your stop loss will be somewhere around this low of this bar. I'm simply using the 25,036, 040 or whatever. And in the next 20 minutes, this goes up to 25,116. So your buying of 81 goes up by 40 points. And if you can see below, this one is going off. This is where it goes off here. So I bought around here, I squared off around here. Then it goes down and stuff. This particular bar, if you notice now, I will just mark this. Okay, what happens out here? The lower AVWAP has broken, right? Option chain analyzer is bearish. Volatility is expanding. There is no bias signal, but the option chain indicator signal is there. So I go short out here at 25050. Look at the right hand side. Look here, you will see the rates. 25050.047. Stop loss is the yellow line, 25091, 40 point stop loss. So around 25050, I will have 80 point target. So 24970. Next bar, yeah, 972. Here I get 24970. Now this buy I am totally ignoring because this is bearish, correct? And it is below the AV wrap and stuff. So this comes down. By the time this triggers a signal, our trade is actually squared up. So I got around 40 points out here. I got around 80 points around here. Then the market is moving up and down and it is showing you congestion. And from here it enters total congestion. So this whole space, you actually don't have any trade. Sorry. I will just mark this. This is the space you definitely do not have any trade. And these are the places where it is suggesting congestion. So these are not very strong trades you can take. But if you notice the whole trend, I want you to notice this particular point. Try to get a bigger picture out here. What is happening in this whole space? Number one, the background color is continuously red, right? It is bearish. If you see the signals, there was one half-hearted buy signal around here which we did not take because of these factors. And for the whole day, whenever market was going up, there was a selling coming in. In fact, if you notice clearly, the upper heavy wrap, it is coming down. And whenever the price is going to the upper heavy wrap, it is getting sold exactly from here. You're seeing these places? So what happens? There was a lot of selling on the market on this day. Next day morning, open fast 10 minutes, major gap down. So you're doing the day trades, that is fine. But in order to understand where there's supply in the market or there's demand in the market, if you look at the bigger picture for the whole day, it will become clearer as you go through this day after day. Let us now go to 27th. Here, I wait till the 925 bar. Market is 24,807. Now a bit of common sense comes into the picture. Market opened at 25,000, correct? Futures. The previous day closing was 2534. Today we opened at 25,000. In the first 30 minutes, 15 minutes, we are down 200 points. So what do you expect now? It will fall even further, another 200 points? Probably not. It is almost near about a 1% down from the previous day's closing. So you'd rather wait for a bounce, wait for a sell signal or some other signal. I showed on the Twitter that day that if you take a trade out here, it will get stopped off. And there are a lot of reasons why you cannot take a trade. Number one, this has fell 200 points in the first 15 minutes. Number two, if you do sell out here at 24,800, this yellow line is standing at 24,917, which is 120 points. So a day trade cannot have a 120 point stop loss on Nifty. You need 240 points to Nifty fall to give you a 1:2 RR. So basic common sense, money management, whatever, do not take this trade, right? You say, what happens here? Do I take this trade? There's a sell signal. You definitely take this trade. This is where you sell because probability is expanding. Option chain is bearish. Okay, this particular place is 24,800. I will just change this. Yeah. So this particular bar is a sell signal. Probability expanding. You are bearish. So you sell out here. So you sell at somewhere around 24,784. Your stop loss is 24,829. Here your stop loss gets triggered. So this is a wrong trade. It is not that all trades will be profits. This is your stop loss trade. What happens after that? This bar. This large bar, probability, it was started compressing, then started expressing. Bias is bullish. Option chain indicator is bullish. So at the closing of this bar, I buy, which is 24,900. What is my stop loss? Yellow line is too close, too much volatility. I will give a stop loss out here. It will be around 80-90 point stop loss. So if you buy out here, even this bar low is somewhere around here. Okay, minimum one bar low you need. This continues going up. It goes up till here. this goes up by 200 points actually. So if you had a stop loss of 100 points and if you're getting 200 points, this has been explained in the videos that these trades are 1 is to 2 RR. So 200 points is more than enough for me. I will square off here and get out. This plays no trade. You said this trade, this buys. Do I take this buys? No, because this buy, this is showing bearish. This buy, this is not bullish strongly. You need this strongly bullish for this buy to be successful. Otherwise, this buy is not of any matter. We come here. This is a sell signal. This is in red. It is going into red in this bar. So even if so this bar, if I get the sell signal, next bar I wait, strong bearish, I will sell out here. This will be my stop loss. Your background color is also red. This one is also red. In fact, you can do the sell here only. No, not here. You have, yeah, this bar you can sell. So this is your stop loss and this is your 1 is to 2 RR. Then you come to 28th. Early morning, there was a sell signal. This bar, you sold this. This is your stop loss, flattened out. Somewhere around here, you got squared off. You did not get your stop loss, actually did not get hit, but this did not move also. Then lot of flat and lot of congestion from here. So from this area, there was no trade this day. This was not a day to day trade, right? This was Wednesday actually. Let us proceed. The day of expiry, Thursday. Early morning, 9:25. There's a buy signal out here, bias, but your option chain indicator is showing you a sell signal. That is bearish. So this one is bullish, this one is bearish. So this is a conflicting signal. You don't take the trade. Goes up, comes down, breaks the lower AV wrap out here. When the lower AV wrap gets broken, option chain analyzer giving you a sell signal, volatility is expanding, the background color is red. This is where you sell. 24,777, you give a stop loss of 24,830, market falls from there. Do I take this sell signal? Yes, you take this sell signal because you are below the lower heavy wrap. This one is red. It gives you money, but gives you money quite some time later. But the sell signals are continuously out here before this fall. This fall on an expiry day 24,730 to 24,670, 60 points is pretty huge. All the option prices will spike. And if you see before this fall, there was a lot of sell signals on the system. Background was red. There was selling was going on. Prices were below the AV wrap. Upper AV wrap was sloping down. Option chain indicator was bearish. So this bar falling down, achanak kya ho gaya? Suddenly it happened. What suddenly, boss? For the last 1 year, everything, 1 month, sorry, last 1 hour, everything was telling you that this is bearish and a lot of selling is going on. Correct? Now let us come to this point, which was the gamma move absolutely at the end. Okay, this was congestion, but this turned into bullish, right? This is the bar I want you to concentrate. This is a 305 bar. Probability is expanding, bullish. This one was flat bearish, it is turning bullish. So this is where you buy at 24,794. So you probably buy at 24,800 call, and in the next 10 minutes we go up to 840 or something. So your 58 rupee call will jump up to somewhere around 50 rupees. In fact, if you see this on Bank Nifty on 29th, which was the monthly expiry on Bank Nifty also, this is a Bank Nifty chart. This is the bar you should have poked in, that 3 o'clock bar. 55,400 goes up to 55,560. Here also that 15 rupee call went up to 160. And it was showing you bullish from pretty early on. But this is the bar you could have probably poked your head in because option chain indicator was not supporting your trade. So on the expiry day at 3,305, both on Nifty and Bank Nifty, you had an upside trade. You could easily buy some calls and get some money. Let's come to yesterday then. Not yesterday, day before yesterday, Friday. This is your Friday. This is 925. This one is bullish. Option chain indicator is bullish. Where is the indicator, like 24,900, 25,000? Just give me a sec, please. Actually, whatever price I am using that price as your ATM. Okay. Both of them are bullish. So this is where I buy 24,970. This low will be stop loss 24,925. I get stopped out. Correct? Number one, if I follow the stop. Number two, watch this carefully. This is the bar you buy. I backed a bar in a blue bar. Why? This one is bullish. This one is bullish. Now I want you to look at the very next bar. I will just mark this color red so that you understand. I am not even looking at the notes actually. What is happening out here is, in this bar, this stays bullish, but the option chain indicator turns deeply red, that is bearish. So the signals are in conflict. So this up move is not getting continued. So if I bought at the end of this bar, which is 24,970, by the time this bar closes, next bar opens, 24,950, I should be out of the trade. See, it is continuously red. I hope this is clear. So if signals are in the same direction, you have no problem carrying the trade. If the signal are in opposite direction, that's a conflict. Do not stay in a trade. If you were in a trade, square off. If you're looking to enter a trade, don't. Wait for both to signal in the same direction. That's why we have two indicators, one after the other. Okay, let us proceed. This particular place, do I sell? Yes, I sell. Because this is red, this is red, this is red. So if I sell out here, 24,876, I will give a stop loss at 24,910, the high of this bar. Lot of hovering around, some money, and here basically enters into congestion. So somewhere around here, I will get out of the trade. This sell signal, do I take? Yeah, I will take this sell signal because this is a sell signal. Background is red. Option chain indicator is red. Flat, some. This sell signal, yes, I take. These are small scalps, nothing else. But from here again, yesterday, rather on Friday, from here I will stop looking at any trade because this is in congestion. Here volatility returns to normal. This one remains bearish. This one is sometime bullish. So conflict, no trade in this whole particular part also. This particular part actually we went into a bit of bearishness. Okay, another point on this particular vol quant, you are saying red is volatility expansion, yellow is volatility compression. What happens when it's black or there's no signal? It is simply normal volatility. The volatility which you see here is normal. It is neither compressing nor expanding. So if you're looking to be an option buyer, if you're in the red zone, if you buy two. If you're in the black zone, you will buy one, that is half size. If you're in yellow zone, you will buy zero, that is you will not trade. So this is how the week progressed in the previous week. If you do have any questions, do use the chat box on the site, or you can always email me, or you can DM me on Twitter. I would love to answer your questions, any queries which you might have. So I believe after seeing the demo, you guys took this software, and over the last 1 week, this is how it has been performing. Uh, the 6 month subscription, I am continuously here. So if you have any questions, feel free to ask over chat, Gmail, or Twitter DM. I will definitely answer. Might not be in next 5 minutes, but definitely in the next few hours, or in the next 24 hours. Okay, that's all for today. See you again next week. Bye.